Hello, everyone. I'm Kai Sheffield. I'm the head of crypto at Visa, and really excited to talk about 5 trends in crypto that Visa is closely following and engaging with clients all across the world on. So I want to start with Bitcoin, and many of the early proponents of Bitcoin thought that it may become this digital version of cash, this electronic payment network that you might use to buy your coffee. And that hasn't really happened. What we've seen is that the volatility of Bitcoin has been a barrier to its use, as a payment method, but that doesn't mean that Bitcoin has failed. Instead, we've seen Bitcoin evolve, and we've seen it really start to find, product market fit as this, digital version of gold. And it's really started to appeal to a new generation of consumers. Millennial and Gen Z consumers all across the world are getting excited about Bitcoin. And they're really looking at it as a new asset class that gives them the opportunity, to be a part of a global online community and, store and hold value in this new decentralized asset. So it's becoming, cultural. It's spreading by memes, over the internet. You hear people talking about stacking sats, a Satoshi or a sat being the smallest unit of Bitcoin. And it's becoming a social behavior, an activity where people are stacking sats and seeing sats as a standard. And so we're seeing a whole new generation of new financial services and crypto platforms that are emerging, really catering to this new audience of consumers who are incredibly excited about Bitcoin. And so what you see here is one of Visa's clients, Fold, who's one of the first companies to offer the Fold Bitcoin rewards card with Visa, where we're seeing demand for consumers to earn Bitcoin back. And so rather than spending Bitcoin, they're looking to spend fiat and earn Bitcoin as rewards. And so we're seeing this start to change some consumer behavior. If you follow Fold on Twitter, there are these amazing anecdotes of consumers who are now excited to pay their electric bill, because now it's an opportunity that when they pay their bill with a Fold Visa card, they're earning sats back and they're able to participate in this new community, and they're able to be a Bitcoin holder. And so, we're seeing both crypto companies are continuing to grow and mature and seeing global audiences of consumers. And then we're seeing many, neobanks and digital wallets that are now starting to integrate, crypto into their core products. We're seeing banks all across the world, looking at the success that the crypto industry has had and say, wait a minute, shouldn't we be offering products that can integrate and incorporate Bitcoin? And as an asset class, if you think about it, for a digital wallet or a neobank, the volatility can tend to be a feature instead of a bug, in that it brings people back to checking their app and opening and seeing what the price is of Bitcoin that day. And so we think it's really important that there are opportunities for Bitcoin to be integrated into existing financial products, but there needs to be education. There needs to be consumer protection. People need to understand the risk. And we're working very closely with clients all across the world around how they can leverage Bitcoin as this new asset class that can appeal to a whole new generation of consumers. So that's Bitcoin. Then we're seeing crypto evolve, where it's no longer just this new asset. Now we're seeing the emergence of stablecoins, where when we think about a stablecoin, we really see it's not necessarily a new currency. It's really a new form factor of existing fiat currencies like the dollar. And so consumers and businesses and institutions, they're going to fintechs and crypto companies, and they're giving dollars that are deposited in an underlying bank. And the fintech is creating US dollar coins that are digital tokens on a blockchain network. We see this as fundamentally a new payment innovation and payment technology that has significant potential to improve things like cross-border payments, like B2B, like remittances. And we're seeing it continue to grow rapidly with over $100 billion of stablecoins in circulation today and hundreds of billions of dollars of on-chain transaction volume of stablecoins moving from one address to another address, on a blockchain network. And importantly, today, these are not necessarily consumers, buying their coffee. When we look at, most of the largest stablecoins, the average transaction value is north of $10,000. And so this is really becoming a new way that institutions and that businesses can transfer dollars and fiat currency, across the world, enable it to settle, very quickly and efficiently. And so we think there's, tremendous opportunity for stablecoins within these new payment flows. Most of them today are pegged and backed by dollars, but we're seeing a lot of interest from financial institutions and fintechs and crypto companies looking to create, stable coins that are backed by other, major fiat currencies across the world. And as we see other fiat currencies become tokenized and turned into this form that can natively run on a blockchain network, we think that will create even more opportunities for payments in new FX markets, in new innovations that will emerge. And one example we like to give is really how stablecoins are becoming this new form of treasury infrastructure. And so we talk to startups and fintech and crypto developers that are all across the world. And what we're seeing is that increasingly crypto developers are building their businesses on top of stablecoins. You could have an amazing engineer or group of engineers that is starting a new DeFi protocol. They're building a new blockchain platform. And instead of going to their local bank and asking for a small business bank account, they're raising money from venture capitalists and angel investors. And many of the top crypto VCs are actually dispersing those investments in stablecoins. They'll send $1 million of USDC to a team of engineers halfway across the world. And they might do that on a Saturday or on a Sunday when they can't even send a bank wire through the normal correspondent banking ecosystem. Then we see that these startups, these crypto developers, they'll hold the stablecoin as their treasury infrastructure. They'll start to pay remote employees in stablecoins. They'll start to pay vendors in stablecoins. And so there's this whole circular economy that's emerging where stablecoins are becoming treasury infrastructure for a new generation of crypto developers and startups. And these companies are small, but they're growing quickly. And we think over time, there are going to be more and more products that make it easy for non-crypto businesses to incorporate stablecoins, particularly for B2B payments and ways that they can innovate with their treasury. So those are stablecoins. Then we're seeing this world of DeFi, or decentralized finance. And one of my favorite descriptions of DeFi, which I believe was coined by the venture capital firm Electric Capital, is that DeFi represents, it's almost GitHub for finance, where the smartest developers in the world, they used to go work for a bank. They'd go and build complex derivatives of financial products inside of a bank, and that was what you did. Now they're writing code in Solidity. They're creating new financial services through smart contracts, directly on public blockchains. And one of the best examples here that we think is super relevant for financial services is what's happening, with crypto lending, where a few years ago, if you had $10,000 of Bitcoin and you needed $2,000 of cash, the only way you could get that was selling $2,000 of Bitcoin. And just in the past few years, we've seen these markets emerge of decentralized lending, where you can take $10,000 of Bitcoin or Ether, you could deposit it as collateral in a smart contract, and then you can borrow stable coins from that 24/7 from anywhere in the world. And so we think there are real exciting innovations that are emerging. It's early, it's experimental. There's a lot of risk. There are smart contract bugs. There are all of these areas where things can go wrong, but this is an open source, transparent financial ecosystem that's emerging with some of the most talented developers all across the world. And each of these protocols that they're building, they're becoming Lego blocks and money Legos that are stitched together that can create just this rapid pace of innovation. And so we're spending a lot of time, with our bank and financial institution partners, just helping them understand, what's happening in DeFi. What are the use cases? What can you do now with a public blockchain that you couldn't do with existing, financial services today? And so we're really excited to see how this develops. We think there's a long way to go, but it's a really amazing, innovative environment that developers are building, on top of blockchain networks. And it really speaks to crypto is about more than just payments when you can build entirely new financial services, on a public blockchain. So that's DeFi. Then we come to NFTs and NFT commerce. And really the way that we think about this is that, crypto started as the ability to create a new type of asset, with Bitcoin and a new asset class. And then crypto evolved to become a new form factor for fiat currencies with stablecoins, which are really crypto dollars or digital dollars. Now crypto is evolving to becoming a new form factor for digital media, for videos, for images, for audio. And so everyone is familiar with what a PDF is, what a JPEG is, what an MP3 is. Now we're seeing NFTs become a new file type format that is native to a blockchain, that has these amazing new properties where you can have provenance. You can see who created that file, where you can, authenticate that this is the real, version of it, where you can track the stream of ownership, where you can transfer it, with these tokens being exchanged over, either decentralized or centralized crypto infrastructure. And so it's this entirely new world that has many parallels, to the early days, of e-commerce. And so when we think about when e-commerce emerged, it created opportunities for, small businesses, that it was no longer about, who would walk down the street, and happen to walk in your store. And now you have to have a lease. You have to be able to have this physical space. And that was how you conducted commerce. Now you could access a global audience of consumers who could buy your products over the internet. But the products that, most e-commerce merchants were selling were still anchored in the physical world. And so you had to solve a supply chain. You had to figure out, how do you manufacture? How do you produce physical goods? How do you then have a fulfillment center? How do you work with factories? How do you then ship? And that has very high upfront costs. And that can be a challenge for many small businesses to manage. And it also limits the global reach. It doesn't make sense to sell a $5 physical product to someone living across the world if it's going to cost $10 to ship it to them. And so what we're seeing with, NFTs, it's this new entirely digitally native form of commerce, where instead of having to produce a physical good, you can interact with a blockchain and a smart contract, and you can mint or produce a digital good. And then instead of having to, ship it and have it delivered, and, whether it's, through, freight, or whether it's, ships or planes, it can be delivered instantly to a crypto address. And we can envision a future where, a crypto or blockchain address becomes just as important as your mailing address, and that consumers are purchasing goods all across the internet that are immediately delivered and available within their crypto address. And we think the other area here that's fascinating is the comparison to gaming, where digital goods have taken off and driven billions of dollars of commerce within large, online games created by multinational gaming corporations. But they've tended to be closed loop, where if you purchase an avatar, if you purchase an item inside of a game, it would stay inside of that game. There'd be no way that you could take it to other games, or you could take it to other platforms across the internet. And then it was hard to resell, that you're putting money in, but you couldn't really get money back out. NFTs are creating open loop digital goods. They're creating in-game items for the internet, where now any individual creator, has the same tools that gaming companies, innovated over the past decade. And that if they have a community, if they have an audience, if they have an idea, they can now create these digital goods and be able to distribute them, to their community, halfway across the world. And so we are incredibly excited about NFT commerce. And we announced last week, we released a white paper where we're really starting to help brands and merchants understand how they can participate, in the NFT commerce ecosystem. And as we did this, we said, we want to learn how to do this. And so we purchased a CryptoPunk, where CryptoPunks are one of the early historic projects that started, several years ago and really took off as blending art and culture and technology. And so we figured that it's going to be really hard, to build an NFT, product or an NFT business if you've never actually collected an NFT. It'd be like trying to build an e-commerce business or an internet business if you've never gone online. And we think that going on chain now has parallels to the early days of going online. And so, we wanted to learn, and we worked with our partner Anchorage to actually purchase, CryptoPunk 7610, which was an incredibly fun process. We learned a lot. And now we're looking to work with merchants and brands all across the world who have valuable intellectual property, who are excited about how they can create these NFT goods and they can participate in NFT commerce. We think that there's going to be an incredible opportunity to increase the velocity of digital commerce and be able to bring more people, into the ecosystem. And so NFTs, we think, are an amazing innovation that is coming out of crypto. And then last, we have central bank digital currencies, or CBDC. And this is now becoming a topic that is top of mind for central banks and policymakers all across the world. And we're seeing just continued interest in experimentation. Whether it's what China's doing with the ECNY, where there are live pilots of consumers interacting with a digital currency wallet offered to them by their commercial bank. And we think that there's going to be continued interest in experimentation, and it's important to not just look at it in a vacuum, and to understand CBDC in the context of all the innovation that's happening in the private sector with stable coins, with Bitcoin, with cryptocurrencies. And we think for CBDC to be successful, it should be a public-private partnership. And you need to find ways to bring commercial banks, to bring payment providers, to bring crypto wallets in to create the next generation infrastructure that government-backed fiat currencies are going to run on. And so we've been engaging with central banks all across the world, helping them think through, what does CBDC look like as a product? What are the use cases that you have to solve for? And if you're taking a long-term perspective, it's not just how could a consumer use CBDC to buy their coffee, it's how could a consumer use CBDC to purchase an NFT in some metaverse experience that we can't even imagine 5 years from now. And we think that's going to take the entire public and private sectors working together to be able to come up with these new innovative solutions and bring fiat currencies into the digital age. And so we see Visa's role as the bridge. We started out looking to be the bridge between crypto companies and helping them issue Visa credentials, enabling on-ramps and off-ramps where they can get connected to the 70 million merchants across the world. And increasingly, we're now becoming the bridge for financial institutions. As we see more and more banks and merchants looking to create crypto and NFT native products, and Visa's a global, neutral, trusted brand that can provide technology solutions to help them do that. So we are incredibly excited about this ecosystem. We appreciate the opportunity to present today and happy to take any questions. Yeah, so today, we announced several months ago that we are supporting USDC, as a settlement currency on Visa's network. And, really our approach is to say that as fintechs and crypto developers are creating new products on top of digital currencies, we want to meet them where they are. And so we want to support, the currencies that our clients demand. And what we're seeing is the most demand that we get are for stablecoins. And for the purposes of settling transactions, over a global payment network, we think stablecoins, make the most sense. But we think over time, the infrastructure that we've enabled, our integration with Anchorage, we could absolutely support, other stablecoins, other currencies, other cryptocurrencies. And so we're really focused on, where are we seeing the most client demand? And then, making sure that, whatever we're supporting meets the local, regulations and rules that we follow. So I can't speak to MasterCard's approach, but I think for us, when we think about Bitcoin, really the opportunity and the use cases where we see the most interest is Bitcoin as an asset class, as something that consumers can invest in and can hold. And so what we've done is we've said we built a product called our Visa Crypto API platform, where we're starting to help banks figure out how to integrate Bitcoin into their core products. And so we think more and more banks will want to incorporate cryptocurrencies like Bitcoin in their core experience, but they're not doing that for payments. They're doing that as an asset. And so Visa provides value add services and technology to banks all across the world. And we think it's going to be difficult for banks on their own to figure out how to manage cryptographic keys, how to get through compliance and analytics challenges. And so we want Visa to be a single connection point for our clients to navigate the crypto ecosystem. And that involves helping banks be able to integrate cryptocurrencies like Bitcoin into their core products. But it tends to be focused around use cases like rewards of what to earn when you spend on a card, or being able to buy and sell it rather than transacting in it like you would a fiat currency today. Yeah, so we're really fortunate to have an amazing Visa research team here in Silicon Valley, and they've been doing just incredible work into the underlying technology and foundations around blockchains. So we've been spending a lot of time looking at things like the Lightning Network, like payment channels and other scalability solutions. And so we continue to do research and experiment. And we think that for blockchains to be able to be used within a number of different payment flows, they need to have ways to scale. We think there are a number of different promising approaches, but it's still early. And so we continue to research and experiment and explore these. Yeah, so we are really excited to figure out ways that Visa can encourage the growth of this ecosystem. And we see first our role is we want to enable better on ramps and off ramps. And so we're spending a lot of time working with the entire payments ecosystem, trying to make it easier for consumers to purchase crypto or NFTs using a Visa credential, using a Visa card. And we think that that's going to be really important for NFTs to go mainstream. That if you have to purchase a cryptocurrency first just to purchase your NFT, that could be a pretty high friction. And so we envision a world where purchasing an NFT is just as easy as purchasing anything else on an e-commerce platform, using a Visa card that can be stored on file, and then the NFT is delivered to your crypto wallet. And so we think there are a lot of opportunities for Visa to help lower the friction of participating and getting fiat in and out of the crypto ecosystem. I'd say this is an area that we've really started when we set up the crypto product team back in 2019, saying there are these crypto wallets and exchanges that are growing really quickly, and they want to be able to offer payment products. And at the same time, there are very few merchants who directly accept crypto, and it can be challenging for merchants to do so. And so we've seen more and more crypto wallets, come to Visa, and we want to work with as many of them as we can to help them issue a Visa credential. So we've seen Coinbase and Crypto.com and FTX and many different crypto platforms that are issuing their Visa credentials. And so that's where the $1 billion in payment volume is coming from. And I'd say $1 billion is a really small number in the context of the trillions of dollars of volume that Visa does, but it's growing very quickly. And so we expect to see the existing crypto exchanges and platforms that are issuing Visa cards, these programs are growing. And then we're seeing new fintech and crypto developers that are coming to us every week looking to issue Visa cards. And so we have the FinTech Fast Track program, where we're making it very easy for developers that if you want to issue a Visa card, apply to Visa, go to the FinTech Fast Track, and we can help you be able to do that. And so we expect that the payment volume coming from these Visa cards linked to crypto platforms is going to continue to grow. Yeah, so I argue that you can do that today. That we have partners like Crypto.com, like Coinbase, like FTX, that you can have a Visa card connected, to, a crypto wallet, and you can spend from a balance of Bitcoin at 70 million merchants across the world. And we think that that is going to be a great bridge between the crypto ecosystem and the traditional fiat ecosystem, as it's going to take a long time for merchants to be able to accept directly. And then I'd say broadly, Visa is a lot more than just a credit card company. Our goal is really to be an engine for commerce. We want to be a network of networks. And so we're really focused on how can we help our clients leverage all sorts of new technologies, including public blockchains, to be able to move value in all sorts of payment flows. And instead of just saying, Visa is about consumer to merchant payments, how can we enable peer-to-peer payments or business-to-business payments? And so there are all these new payment flows that are emerging that we think, public blockchains, cryptocurrencies, and stablecoins can play a role in. And we see Visa as the bridge to helping our clients be able to access them.